Hey everybody, and welcome back to Investing with Wesley. You know, recently, all over the news right now, you're hearing of the Chinese Evergrande collapse. Today's episode, I want to explain to you exactly what's going on and how it affects you. Let's get into it. Okay, so for starters, what is the Evergrande? Well, the Chinese Evergrande is a multi-billion-dollar housing development business. In fact, this company is so large, it is the second largest property development company in China. And Evergrande is currently $300 billion in debt, and recently has begun defaulting on all of their obligations. Now, really, when you're talking about property development, being in debt isn't all that new. Construction, property development, anything in that industry often uses debt because the interest rates on mortgages and property development in that sector are so low. The interest rates are so favorable. So operating in debt really isn't all that new. However, Evergrande is so in debt that they are the #1 indebted company for property developments in the entire world. Now, obviously, to be in this much debt, it doesn't happen overnight. So what happened? Well, over the course of the years, Evergrande has been using debt to fund their new projects, and then before offloading all of their properties, they use the expected income from selling those properties to accumulate even more debt and even more credit. So before they even sold and actually made a profit, they're already using the suspected profit as collateral against new debt. And this has just snowballed year after year over the decades, and now we have a $300 billion debt. Now again, this is a way a lot of companies operate, and although I think it's absolutely stupid and way too risky, it's common practice for a lot of construction and real estate development companies out there. And really, there was no problem at all until last year when the coronavirus shut everything down. For several years now, China has been going through a real estate boom, just like the United States had many years ago. And everything was going great. They were offloading their properties, building more properties, everything was going smoothly, and no one would have even noticed this looming issue had the coronavirus pandemic not shut the entire world economy down. Because workers had to stay home, it means that the real estate did not get built or sold in time, and the company actually had to start paying back its debts before they were able to sell these properties. And now with the world coming slowly out of the pandemic, people aren't really buying like they used to because people are being smarter with their money. So because of that, Evergrande started to do what's called a pre-sale. Now basically what this is taking deposits and selling the finished product before it's actually finished. Now again, this is a very common practice even here in the States, where pre-sales are often happening on new developments all the time. There's nothing really new with pre-sales. But the problem with what Evergrande is doing is that they know they're in extremely large debt and that they can't afford it. And yet they're still building properties, selling them for full price, even though the value of them continuously goes down. And lately, they're not even finishing these products. They're not even finishing building the homes. And because they have to make these debt payments, they're selling all their portfolio worth of real estate at a fraction of the cost. Now, normally, even doing all of this wouldn't be that big of a deal. But because this company isn't generating sales and actually finishing and selling their products, this real estate empire that they've built, and because China has recently cracked down on all their lending rules, there is no new money coming in whatsoever. Which obviously, for a company as in debt as Evergrande, this is a huge recipe for disaster. Now you might be asking yourself, why is the news going crazy over this and why should I even care? And I'll get to that answer in a second. But first I want to answer, is Evergrande, a multi-billion-dollar company, too big to fail? It's no surprise that the United States loves bailing out their largest contributors to our economy. Is China going to do the same? And the answer is probably not. The Chinese government isn't as merciful as the US government when it comes to bailing out large businesses. And I'm paraphrasing, of course, but recently in a press announcement, the Chinese government basically said that if they got themselves into this mess, they're going to be the ones to get themselves out. Which honestly, I 100% agree with. Too often do these companies get so large that it's impossible for them to fail, and the government just prints money to bail them out and keep the businesses afloat. That kind of bailout strategy often creates toxic morals in a company, thinking that they could really do anything and get into as much debt as possible because Papa government over here is always going to bail me out. Now, it's no surprise that the Chinese government works very different from the US government, and they're probably going to turn Evergrande into a huge example for all the other Chinese businesses out there. But at the same time, if Evergrande does go bankrupt and does fail, it would devastate the Chinese economy like no other. Evergrande makes up about 30% of the entire Chinese GDP. So in a sense, they are a little too big to fail because it would totally ruin all the economic growth that they've had over the years. So real quick, some options that the Chinese government can offer Evergrande instead of a bailout is a total debt restructuring, meaning they still have to pay those debts back, but it's restructured on how much interest and for how long they get to carry these debts. Basically, think of it like refinancing your debts. You get to extend your payment terms and lower your monthly payment. The second option is a China-only bailout, meaning that China will only print money and only bail out the portion of Evergrande's debt that directly affects the Chinese economy. So every investor holding on to some of Evergrande's debt in China, they'll get bailed out and they'll get their money back. But all the foreign investors, like in the US or other countries that are investing in Evergrande's debt, they will not be bailed out and they will basically be stuck holding the bag or the loss. Both of these options would save the Chinese economy while also teaching Evergrande a vital lesson. And now for the next question. Companies go bankrupt all the time, so why should you care? What makes this any different? Well, one I already mentioned. Evergrande makes up about 30% of the total Chinese GDP. So the entire Chinese economy would crash. And a lot of people here in the States are often investing in China because its economy has been growing so rapidly. But even if you're not one of those, why should you care? The answer to that question is called contagion. Now, all COVID-19 jokes aside, contagion is actually a very real financial issue. Contagion is when the fall of one company affects a bunch of other companies that are seemingly unrelated. Let me give you an example to help you understand exactly what contagion is and how it spreads. Evergrande, as we already discussed, owes a lot of money to its investors, the people holding on to its debts or its bonds. Now, obviously, if Evergrande defaults on their obligations, it's safe to say that whoever's investing in those bonds has obligations of their own. And if Evergrande doesn't make that debt payment to those investors, then those investors will have to sell some of their other investment assets to meet their obligation goals to perhaps their investors. And this cycle of selling assets to pay obligations continues and continues, but slowly goes down to the point where someone doesn't have to sell any assets because their net worth is so low that, in a sense, they just collect a paycheck. It goes from the ultra wealthy or the ultra expensive businesses like Evergrande and trickles down throughout all the system and all the economies to all its investors and their investors' investors and so on. So you can see how one very large business failing to meet its obligations can have a widespread effect. Now you might be thinking to yourself, does this mean it's going to be another 08 situation triggered by China's real estate market causing another global financial crisis? Well, the answer to that is probably not. Because one, the US is the financial capital of the world, as well as is the reserve currency. Everything that we do does have a huge effect on the world economy. But China's economy is still closed off to many parts of the world. So although China might experience an economic collapse, I don't really think it'll be a global financial crisis. But I do think because of contagion, we'll see the US markets sell off probably anywhere from 3 to 6% in upcoming months. And this is because of what I just said. People are going to have to sell off their assets to pay for their obligations because Evergrande failed to meet their obligations. In a nutshell, that's why Evergrande has been all over the press lately and even all over YouTube with a bunch of other financial educators and financial communicators making videos on what this Evergrande crisis is. It's not really a crisis that affects you directly, but because of contagion hitting the financial markets, it could indirectly affect you and your investments. But like I said, China is closed off economically to many parts of the world, so I really don't think it's going to cause another global financial crisis. The most important part of all this is to look at all of your investments, make sure you're diversified, and if you are holding any investments located in China's economy, maybe review them for how solvent they are or how sturdy they are, just in case an economic collapse in China is imminent. Are your investments going to last, or are they going to go bankrupt too? Maybe is a good time to do a quick checkup on all your investments located in your portfolio. I hope you got value from this video. If you did, please remember to comment, like, and subscribe. I have a dedicated Facebook and Instagram account. If you ever had a question, comment, or just wanted something addressed, or maybe you wanted to recommend a topic for another video, feel free to message me there because replying to everyone's comment feeds down below can kind of get confusing. Either way though, the choice is yours, and I'll see you in the next episode.